When buyers start looking at homes using a VA loan, they often assume the property needs to be close to perfect. That expectation usually comes from hearing that VA loans have stricter standards or that repairs become a problem once the appraisal happens. What tends to happen instead is more nuanced. Buyers find homes that fit their budget and location needs, but show wear, deferred maintenance, or areas they would want to update over time. At that point, the question is less about whether a VA loan allows repairs and more about how those repairs are treated inside of the loan structure. Some work must be completed before closing, some work can be addressed later, and some work requires a different loan approach altogether. So understanding those distinctions early makes the entire process calmer and more predictable. This topic becomes confusing quickly for a simple reason. People use the word repairs to mean a lot of different things. One buyer says repairs and they mean peeling paint or a missing handrail. Another buyer says repairs and they mean a roof nearing the end of its life. Another buyer says repairs and they mean a full kitchen remodel, new flooring, and moving walls. So a VA loan does not treat those situations the same way at all. The VA has standards for what a home must meet to be eligible, and the VA has also limited tools for handling certain repairs through the loan process. So renovation style projects exist in the VA world as well, although they are not as common and they require a different level of structure. This works best when the categories are kept separate so buyers can match their situation to the right path. A VA loan is designed to help veterans become homeowners in a property that is safe, sound, and suitable for occupancy. That purpose shows up in the VA's minimum property requirements. These requirements are not about style. They're not about whether the home is updated. They focus on whether the home is livable and safe in a basic, practical sense. It helps to think of this as a baseline. Standards often include things like a roof that keeps out water and weather, heating that can reasonably support occupancy, electrical systems that function safely, water and sewage that work as intended, structures that appear stable and sound, and access that allows normal entry to the home. So many homes meet this baseline without any issue whatsoever. When a home falls short, the VA expects the issues to be addressed in a clear, documented way before the loan can be finalized. Once the baseline is clear, the next step is separating required repairs from optional improvements. So required repairs are items listed on the VA's minimum property requirements. These are not preferences, these are conditions that must be resolved for the home to qualify. Optional improvements are different. They matter to the buyer's experience of the home, but they're not tied to immediate safety or habitability. So examples of optional improvements usually include things like updating kitchens or bathrooms, replacing flooring for style or comfort, cosmetic updates inside or outside of the property, changing fixtures or finishes, and then layout changes that are preference-based. So this distinction matters because most buyers assume a loan simply can include whatever work they plan to do. A standard VA purchase loan typically funds the home as it's being purchased with the expectation that it meets VA's baseline standards. So renovation style financing can exist in VA lending, but it's a different structure and it needs to be planned intentionally. The VA appraisal tends to be where this becomes real for buyers. A VA appraiser has two jobs. It establishes an opinion of value and it also evaluates whether the home appears to meet the VA's minimum property requirements. So if the appraiser identifies items that fall below that baseline, the appraisal can call for repairs. And at that point, the transaction usually moves into one of a few lanes. The seller may agree to complete the required repairs before closing. A buyer and seller may negotiate how those repairs are handled. In limited situations, repairs may be handled through an escrow process that allows the work to be completed after closing under strict conditions. Okay, that third option is where many buyers have heard something vague like, sometimes you can close and fix it later. That can be true in limited cases, though it's not automatic and it's not available for every repair type. The safest approach is to plan as though required repairs need to be completed before closing unless the lender confirms that an escrow structure is available for that specific situation, and they rarely are. Post-closing repairs are usually discussed as a repair escrow. The concept is straightforward. Funds are held back at closing to cover a specific repair or repairs. The repairs are completed within a defined time window. The work is then verified. Funds are released only after repairs are completed as agreed, and this option is designed for situations where the home can be safely occupied and the repairs are cleanly defined. The structure typically requires a clear list of repairs being completed, a documented cost estimate, a defined defined completion timeline and verification that the work is done correctly. This approach is not a shortcut. It is a controlled process meant to keep the transaction moving when timing makes pre-closing completion difficult. It also increases complexity, which is why not every lender offers it and not every property situation fits. A lot of buyers are surprised by this part. They assume that a home purchase and a home renovation can be treated as one combined project, but a standard VA purchase loan is usually structured for a home that is ready for occupancy once the transaction closes, with only limited exceptions. Large renovation projects introduce variables that underwriting cannot treat casually. Budgets change, timelines shift, change orders happen, contractors vary in quality, the final product can differ from the original plan. Those realities don't make renovations bad. They simply require a more deliberate financing structure. So most standard purchase loans, VA included, are not designed to absorb that level of construction uncertainty inside of a typical home buying timeline. This is where buyers benefit from clarity early on. The question becomes less about whether renovations are allowed in theory and more about whether the right loan structure and timeline are in place to support them. VA lending does have paths for repairs and improvements that go beyond a simple fix it before closing approach, and they're less common in the market. They require more coordination. They can also be the right tool when a buyer's goal is clear and the plan is realistic. And these structures may be used to purchase a home and complete approved repairs or improvements, refinance and fund improvements on a home the veteran already owns and occupies, address upgrades that improve livability or long-term suitability. So these loans often involve as completed approach, where the value is based on what the home will be worth after the work is done. And that adds power. It also adds requirements. Once a loan includes renovation or repair work in a formal way, the transaction becomes more documentation heavy. That does not happen just to create busy work. It happens because money is being advanced for a future result and the process needs safeguards. It is common to see requirements such as contractor credentials and registration requirements, written scope of work that is specific and complete, itemized cost breakdowns, timelines for completion, and then inspections or verifications before each of the funds are released. So funds are typically managed in stages, okay? So the work is verified before the payment is released. Any changes are documented, and this structure protects the veteran from paying for incomplete or poor quality work, and it protects the loan from becoming unstable mid-process. It also means the timeline is usually longer than the standard purchase. That is not a flaw. It is simply part of the trade-off when improvements are built into the financing plan. Some upgrades fall into a more specific category. Energy-related improvements can sometimes be handled through VA energy-efficient provisions when structured correctly. And this can include upgrades intended to reduce utility costs and improve efficiency. The key is that these upgrades still require planning and documentation. They need to be included intentionally in the loan plan, and they're not handled casually at the end of the process. So buyers who are considering energy improvements benefit from raising that goal early, so the loan structure supports it instead of trying to squeeze it at the end after the fact. A few misunderstandings show up repeatedly in this area, so clearing these up early tends to make everything smoother. So assuming that any work the buyer wants to do can be rolled into the VA loan is a mistake. Treating cosmetic updates as if they are required repairs, again, that's an issue. Expecting a repair escrow to be available without confirming the lender's process, because they rarely are. Waiting until after a contract is accepted to ask whether renovation financing is needed. Big mistake. And then understanding the documentation and timeline required when contracted work is part of the loan. So these types of things need future planning. None of these misunderstandings come from bad intentions. They usually come from trying to simplify a system that is built on rules and documentation. A calm plan early reduces pressure later. Planning is where this topic becomes practical. When a buyer is looking at a home that needs work, it helps to slow down and sort the work into categories before moving forward. So ask these questions. What repairs affect safety or habitability? What repairs affect the loan's eligibility? What improvements are optional and can wait? What improvements are essential to the buyer's plan? And what timeline is realistic for the completed work? Those questions are easier to answer before a buyer becomes emotionally attached to a property, but once a contract is signed, the process speeds up. So deadlines tighten, negotiations become more sensitive. Early clarity reduces surprises and creates better decisions. VA loans can support homes that need work. VA loans can also require repairs when the home falls below the VA's baseline standards. Some repairs must be completed before closing. Some repairs may be addressed after closing through a much stricter escrow process when the situation qualifies and the lender supports it. Renovation style plans can absolutely fit in VA lending as well, though they typically require a different loan structure, more documentation, and a longer timeline. So the most important piece is understanding which lane your situation fits in before you write an offer. That understanding keeps the process calmer. It keeps expectations realistic. It reduces the chance of being surprised late in the transaction. If you're thinking about using a VA loan on a home that needs repairs or improvements and want to understand how it affects your financing options, use the link below to book a call with my team. These conversations are most helpful early, before an offer is written, because they can save time, stress, and surprises later. And if you want clear explanations about how lending rules actually work in today's market, make sure to subscribe. My goal is to help you make informed decisions with confidence and ultimately win with Wade.